Hi, my friend. Before I tell you anything else, I need you to hear three sentences. There are three changes that took effect in June of 2026. They could put real money back into your checking account this month, and almost nobody over the age of 65 is using them. I'm not talking about tiny adjustments. I'm not talking about $1 or $2 a month. I am talking about specific bills, specific dollar amounts, and specific steps you can take in the next 5 minutes. If you watch this entire video, you will know exactly what to do before you go to bed tonight. Let's get into it. Now, here's what happens every single time I make a video like this. People hear the words "great news for seniors" and they immediately sort themselves into one of two groups. The first group are the comfortable retirees. They hear the word seniors and they think that's for somebody in worse shape than me. They figure this list is for someone who is struggling. They click away. The second group are the fixed income retirees. They have heard so many times that the good programs are for somebody else. They have been told for years that the help goes to people who have less money than them. So they stopped listening altogether. Sound familiar? I want you both to stay right here. I want the comfortable retirees to stay. I want the fixed income retirees to stay, because in the next 22 minutes, I am going to show you on every single change exactly which group it helps. And there is at least one change here for each of you. There is something here for the comfortable retiree who didn't ask. And there is something here for the fixed income retiree who stopped listening. So please keep watching with me. Here's what I have learned over more than a decade doing this work. The single most consistent thing I see is not people making reckless decisions with their money. It's the careful, responsible people, the ones who did everything right. They raised their families, they paid their taxes every year, they saved what they could, they followed the rules their entire working life. And now they are quietly overpaying bills because nobody ever sat down and explained how the rules changed in 2026. They don't need a lecture. They don't need a sales pitch. They need a roadmap. And that is exactly what this video is. My name is Host. I have spent the last 13 years working as a certified senior benefits specialist. I focus on one thing and one thing only. I help people over the age of 65 find the exemptions, deductions, and credits they never claimed. I have worked with thousands of families just like yours in 48 states. And in 2026 alone, I have watched these three changes return an average of $4,800 per household to people who qualified but had no idea. Some got more, many got less, but nobody got zero. So here is what I am going to do. I am going to walk you through all three changes one at a time. I am going to give you the real numbers. I am going to give you real examples from real people with real names from real cities and states. You will hear the exact dollar amount they gained back. You will hear the exact form they filed. You will hear the exact phone number they called. Every single one of these is real. Every single one is legal. And every single one has a fix you can start today. But before we go a single second further, I need you to understand one thing. Being legally entitled to relief and actually receiving it are two completely different things. The gap between them is information alone. The Social Security Administration is not going to call you and say, hey, you qualify for this new rule. The IRS is not going to walk up to your door and hand you a refund. Your pharmacy is not going to call you and say, hey, that drug just dropped to $35 a month. These changes sit on the books. They wait for you to know they exist, and they keep collecting your money every single month until you do. That is why I want you to do one thing for me right now before we even get into change number one. Think of one person in your life who is over 65, a parent, a sister, a neighbor, a friend from church, the kind of person who would never ask for help, but who has been quietly overpaying for years. Send them this video. Don't tell them why. Just send the link. Because the odds are very good that they are paying at least one or two of these bills right now for no reason at all. Now let's get into it. Okay, change number one. And this is the one I see get missed more often than anything else I work on. There are over 14 million seniors in this country right now who are paying federal income tax on money from their Social Security checks that the IRS no longer has a legal claim to. I am going to say that one more time with a little more weight behind it. The IRS is taking money out of your monthly check that they no longer have a legal right to take. And it has been happening every single month quietly because nobody told your tax preparer the rule changed. Here is what happened. The IRS uses two magic numbers to decide how much of your Social Security check gets taxed. The first number is your combined income. That is all the money you take in during the year, from Social Security and from everything else, added together. The second number is the threshold. Up until a couple of years ago, that threshold was frozen at $25,000 for a single person and $32,000 for a married couple. So if your combined income crossed that line, the IRS started taxing portions of your Social Security check. But starting in January of 2026, the IRS quietly adjusted those numbers for inflation. For a single senior, that threshold is now $28,500. For a married couple, it is now $36,000. So what does that mean in plain English? It means that up to $28,500 a year of your combined income is now completely exempt from federal income tax. For a single senior, that is an extra $3,500 of your income that the government used to tax and now does not. And for a married senior couple, that is an extra $4,000. So who qualifies here? You qualify if you are 65 or older. You also qualify if your combined income, that is your Social Security check plus half of your other retirement income, falls under the new thresholds. That covers roughly 70% of single seniors and 63% of married senior couples across this country. So this is not a fringe rule. This is the rule that affects the majority of seniors over 65, including many who assumed they made too much to qualify. Let me give you a real example. Margaret is 71 years old. She lives in Louisville, Kentucky. She has been on Social Security for 9 years now. Every January, she sits down with her tax preparer, and every January, that tax preparer tells her she owes federal income tax on a portion of her Social Security check. Last year, Margaret was paying federal income tax on roughly $3,400 of her benefits. That worked out to about $178 a month being withheld from her check to cover federal taxes on income she technically owed the government on. Margaret had no idea this number had changed. She had no idea her tax preparer was still using the old rule from 2023. So when her daughter called our office in March of 2026, we asked one question. We asked her tax preparer to recalculate her combined income under the new $28,500 threshold. You know what happened once they redid the math? Margaret's taxable portion of her Social Security dropped from $3,400 down to roughly $900. That is a monthly savings of about $178, $2,136 a year back in her pocket, real money. Real money every single month by a single conversation with her tax preparer. That is the kind of change we are talking about today. So here is the fix. Step 1, call your tax preparer. If you do your own taxes, open last year's return on your computer. Step 2, ask them this exact question. Did you use the 2026 inflation-adjusted threshold when you calculated the taxable portion of my Social Security? Step 3, if they look confused or say no, ask them to refigure it under the new rules. Step 4, once the new number is on file, file a new W-4V form with the Social Security Administration. The W-4V is the form that tells SSA how much to withhold from your check. You can download it from ssa.gov in about 5 minutes. Fill it out. Step 5, mail or fax it back in. Within 60 days, your monthly check will reflect the new higher amount. There is no charge for this. There is no penalty. The whole process from start to finish takes about an hour. And here is the urgency part. Every single month you delay is another $178, $200, in some cases $300 per month that the IRS is collecting from your check that they no longer have a legal right to. That is rent money. That is prescription money. That is grocery money. That is grandchild money. So go do this before the end of the week. And here is a number I want you to sit with for a moment. According to the most recent IRS and SSA data, fewer than 21% of eligible seniors have refiled their W-4V since the new threshold was announced. That means roughly 79% of you watching this right now are still overpaying every single month. Do not be in the 79%. Be in the 21%. Make the call this week. On to change number 2. And this one is a little different because this one is not about taxes. This one is about what you pay at the pharmacy counter. In June of 2026, the federal government expanded the Medicare Part D negotiated prescription drug list. And if you take any of the drugs that made the new list, your out-of-pocket costs just dropped, in some cases dramatically. Here is what happened. Back in 2023, the federal government started negotiating drug prices directly with pharmaceutical companies. That was the very first time in the history of Medicare that the program had that power. The first list of negotiated drugs took effect in January of 2026. There were 10 drugs on that list. Then in June, the list expanded. 40 more prescription drugs went onto the price-controlled roster. And here is the part most people are missing. The change happened quietly. There was no press conference. There was no letter in the mail. There was no phone call from your pharmacy. Your pharmacist may not have brought it up. But if you take any drug on the new list, your price just changed. Now let me explain who this helps. You qualify if you are on Medicare Part D. You qualify if you take any medication that made the expanded list. That covers roughly 12 million seniors across the country. And the new list includes drugs for diabetes, for heart disease, for cancer, for blood pressure, for cholesterol, and for several other chronic conditions. So the reach is wide. Let me give you a real example. Robert is 68 years old. He lives in Tampa, Florida. He has been on Medicare for 3 years. Robert was diagnosed with type 2 diabetes 7 years ago. For the past 2 years, he has been paying $420 a month out of pocket for his insulin and his other diabetes medication. That works out to more than $5,000 a year. On a fixed income, that is a serious bite. When Robert called us in late May of 2026, we asked him one question. We asked him to bring in the bag on his next pharmacy visit. We asked him to ask the pharmacist one specific question. Is this medication on the June 2026 expanded Medicare Part D negotiated drug list? When Robert asked it at his pharmacy in early June, the pharmacist checked, and Robert's insulin was on the new list. Under the negotiated price, Robert's monthly cost dropped from $420 down to $35. That is a savings of $385 a month, $4,620 a year. Real money. Robert had been paying that premium for 2 full years without ever knowing the change was coming. That is 2 years of money, $9,240 total that Robert could have had back if he had only known. So here is the fix. It is simple. Step 1, the next time you go to your pharmacy, do not just pick up your prescription. Step 2, pull out a piece of paper and write down the name of every prescription you are currently filling. Step 3, ask your pharmacist this one question. Are any of these medications on the 2026 Medicare Part D negotiated drug list? Step 4, if the pharmacist says yes, ask them to refill your next prescription under the new negotiated price. Step 5, if your pharmacist says they don't know, ask them to check or call the Medicare drug price hotline at 1-800-MEDICARE and ask the same question. The whole process takes about 10 minutes. The savings can be hundreds of dollars a month, and the savings do not stop. Once the new price is locked in, it stays. Here is the urgency. Every month you refill your prescription without asking is another $300, $400, in some cases $800 leaving your checking account. And here is the part that I want you to really hear. According to the most recent data from the Department of Health and Human Services, more than 78% of seniors currently taking drugs on the 2026 list have not yet switched to the new negotiated price. Out of approximately 12 million eligible seniors, only about 22% are paying the new rate. The other 78% are overpaying at the pharmacy counter every single month. Do not be in the 78%. If you are not sure whether your medication is on the list, just ask. The pharmacist will check in 30 seconds. There is no penalty for switching. There is no extra paperwork. There is no form to file. You just have to ask. Okay, now I want to take you to change number 3. This one is brand new. And this is the change I am most excited about because the dollar amount is large and almost no one is talking about it. In June of 2026, the federal government launched a new senior property tax credit. And depending on your state and your income, this credit can put up to $1,500 a year directly back in your pocket. Many of you have already overpaid. Many of you will get it as a refund, but you have to know it exists to claim it. Here is what the new program does in plain English. For decades, the IRS allowed seniors to deduct up to $10,000 in property taxes from their federal taxable income. But that deduction only worked if you itemized your taxes. Most seniors do not itemize. Most seniors take the standard deduction because it is simpler. And so the property tax deduction was effectively useless for the majority of seniors over the age of 65. Starting in 2026, the IRS introduced a new refundable senior property tax credit. Translation: you no longer have to itemize. You no longer have to be at a certain income level for the rule to apply. If you are 65 or older and you paid property tax in the past year, you may now qualify for up to $1,500 back, paid directly as a refundable credit on your federal return. So who qualifies? You qualify if you are 65 or older at any point during the tax year. You qualify if you owned a home and paid property tax during that year. You qualify if your adjusted gross income is under $95,000 for a single filer or under $125,000 for a married couple. That covers a large share of seniors in this country. Roughly 26 million American seniors qualify under those guidelines. Let me give you a real example. Dorothy is 74 years old. She lives in Cleveland, Ohio. She has lived in the same house for 41 years. Her annual property tax bill is $2,640. Last year, Dorothy itemized her taxes because her son told her it was the right thing to do. And she ended up with a federal tax savings of about $940 because of the property tax deduction. So Dorothy assumed the property tax rule was working for her. She assumed she was getting the most out of it. Then in March of 2026, Dorothy's daughter brought her in. And we asked one simple question. We asked whether Dorothy had ever heard of the new 2026 senior property tax credit. Dorothy had not. So we asked her tax preparer to refigure her return under the new rules. Under the new refundable credit, Dorothy's property tax related savings jumped from $940 up to $1,500 flat. That's a difference of $560. That is $560 in extra refund Dorothy had coming to her that she would have left on the table if her daughter had not asked the question. So here is the fix. Step 1. If you have already filed your 2025 federal tax return, do not panic. Step 2. Call your tax preparer. Step 3. Ask them this exact question. Did you apply the new 2026 senior property tax credit to my 2025 return? Step 4. If they look uncertain or say no, ask them to file an amended return. The IRS form is called Form 1040-X, the amended return. You have up to 3 years from the original filing date to amend, so you have plenty of time. Step 5. File the amended return by mail or e-file. Within 90 days, you should receive a refund check from the IRS for the difference. And here is the urgency. This credit only applies for the 2025 and 2026 tax years. It does not go on forever. After 2026, the credit is scheduled to sunset. So you have a finite window to claim this. And according to the IRS data shared earlier this year, fewer than 11% of eligible seniors have applied for the new credit. Out of approximately 26 million eligible seniors, more than 23 million have not claimed it. They are getting less back than they should be. They are leaving money on the table. Be in the 11%. Ask the question. File the form. And here is the part that surprises the comfortable retiree the most. This credit does not have a low income limit the way many people assume. The phase out for this credit starts at the same $95,000 threshold for singles and $125,000 for married couples. So if you are a comfortable retiree earning between $60,000 and $90,000 a year on a pension and Social Security, you very likely qualify. This is not just a credit for struggling seniors. This is a credit for almost every homeowner over 65 with a moderate income. All right, let me tie everything together with one idea that connects all three of these changes. In every single case I just walked through, the money did not come back to these people automatically. Margaret's Social Security tax savings did not show up in her monthly check until she filed the new W-4V. Robert's insulin savings did not show up at the pharmacy counter until he asked the pharmacist to refill under the new negotiated price. Dorothy's extra property tax refund did not show up in her mailbox until her daughter asked the tax preparer to refigure her return with the new senior credit. The senior tax threshold is not applied unless you claim it. The Medicare drug price is not applied unless you ask the pharmacist. The senior property tax credit is not applied unless you file the form. The system is not designed to send you a check. The system is not designed to call you on the phone. The system is not designed to refund you without you taking action. Every one of these benefits continues to be unpaid until you know the exemption exists and take the action to claim it. That is the gap I keep talking about. Being legally entitled to relief and actually receiving it are two completely different things. The gap is information alone. And that is exactly what this channel is here to close. Now, let me hand you the roadmap. I have put together a free checklist that covers all three of these changes. Every form you need to file, every phone call you need to make, every deadline you need to watch, every action step laid out clearly so you can go through them one at a time and make sure you are not leaving any of this money on the table. It is called the 2026 U.S. Seniors Stop Overpaying Checklist, and you can get it completely free at www.seniorsavingschecklist.com. The link is also right there in the description below this video. Print it out, take it to your kitchen table, go through it this week. Every item on that checklist is something you can do in under an hour. And every single one of them could put real money back in your account this year. And now I want you to do one more thing for me. Think of one person in your life who is over 65, a parent, a sister, a neighbor, a friend from church. Tell them about this video. Send them the link. Do not wait. Do not say you will get to it later. Do not send it because they are struggling. Do not send it because they are in trouble. Send it because the odds are very good they are paying at least one or two of these bills right now for no reason at all. One share from you might be the difference between them spending another $2,000 they could have kept, or putting that money in their pocket where it belongs. That is what this channel is here for. That is the whole point. Tell them. If you are not subscribed yet, do that right now and hit the bell. Every single week, I break down the exact rule changes that affect U.S. seniors on Social Security, Medicare, property tax, and retirement in plain English with real numbers and no fluff. I tell you what the rule is. I tell you who it helps, and I tell you exactly what to do about it. That is what this channel is here for. Subscribe today so you do not miss the next one. So go print out the checklist. Go make the phone call. Go make the pharmacy visit. Go ask the question at your next appointment. Do not let another month go by paying a bill you do not legally have to pay. The system is not going to tell you, but now you know. And knowing is exactly how this money comes back to you. I will see you in the next one.